Okay, everyone. I think we can go ahead and get started and let people join as they show up. So aloha, everyone. Thanks again for joining us. My name is Micah Hicks. I'm the chair of the YPDA Economic Justice Committee. I'll be moderating today's forum. So first time doing this, so we'll see how it goes. Wish me luck. I'm joined today by Representatives Amy Perruso, Representative Dale Kobayashi, and Walt McRee from the Public Banking Institute. But before I have them introduce themselves, I'll introduce today's sponsors. So as you can see on the screen behind me, this forum is co-sponsored by YPDA, or the Young Progressives Demanding Action, the Sierra Club of Hawaii, HAPA, Hawaii Alliance for Progressive Action, and Faith Action for Community Equity. So big mahalos to all of these folks for helping us get this together, all a bunch of fine institutions. And I believe that will at some point in this meeting be putting links to all of those organizations, to their homepages into the chat. So you can go check them out if you haven't done so already. And with that, let's go ahead and move on to our panelists, starting with Representative Perruso. If you don't mind, we'll just go alphabetically based off of first name. So if you could just introduce yourself a bit, give us your background, what district you represent, and maybe how you first started public banking.
Sure, I'm really grateful to be part of this conversation. I think it's super important. So I represent Wahiawa, Whitmore Village, and Launani Valley. And my background is in teaching. I'm a veteran social studies teacher of 20 years. And I was really actually inspired first to learn more about this topic by the work of the former representative from my district, Marcus Oshiro, and then most recently, we have state union leadership. So as part of the state union leadership, and Justin Huey was really active on the national level, advocating with the National Education Association for public banking. And now most recently, Dale Kobayashi has become my hero because he's picked it up, and I want to do whatever I can to support his work.
Okay, thanks, Amy. So yeah, why don't we move on then to Representative Kobayashi, if you wouldn't mind, give us a bit about your background, what district you represent, and just how you got involved with this.
Okay, thanks, Micah. Thanks, Amy. So I represent Manoa Valley primarily. My district goes down to the freeway, basically Manoa, Makali, University, Punahou, parts of Kaimiki. I have a finance background, and that's really probably what started me looking at this issue. My background is in global bond markets. I was a bond trader for corporate and government securities to central banks of developed countries. So in Europe and Asia. So that's been my my impetus. When I came back to Hawaii after my career in the global bond markets, I ended up being the chief investment officer at First Hawaiian Bank, the largest bank here in Hawaii. And I did that for a while. Then I issued state bonds for the state of Hawaii as an employee of Morgan Stanley Investment Bank. So my job was to get them to choose us to underwrite the bonds. And then I became a rep in 2018. So I got out of finance and ran for office. And I have a number of things on my plate that I've been trying to push. And one of the reasons I gave everything up to do this is we have had a lack of financial expertise in the legislature. Money people are generally people that don't want to give up large salaries and take a small salary to work as a legislator. So we've never really had people with that expertise sitting in the Hawaii State Legislature. We do now. So it's incumbent upon me to really push this issue. A lot of the history of it that you might have heard related to a lack of confidence that we had the expertise to push this through. So now is the right time. And given the budget hole we have now, it's even easier. We passed this through the House last year. It would get through the Senate. It's less robust than I probably would have liked, but it's a matter of just getting whatever we can get through. And it failed many times in the past. So what we have now with the working group is palatable to the powers that be, or it was last anyway. And from talking to people, we'll get this through this year. I'm pretty sure.
Wow.
Great. Thanks for that, Dale. And last but not least, Walt, could you give us your own background and maybe how you became an advocate in this area?
Sure. Aloha from the East Coast of the continent, of our continent here, and where it's dark and cold. So I'm delighted to be with you guys, and thank you very much for including us. I'm very excited that Representative Kobayashi has got such a robust background in banking. I've been involved in the public banking movement really since about 2011, which is about when it started. Alan Brown, my colleague and co-founder at the Public Banking Institute, wrote the book Web of Debt, which in 08 and 09 was a bestseller. It was really an eye-opener for many people about the nature of debt, the fact that we live in a sea of debt, private debt. My personal background, professional background has been in a lot of social interest, public interest, and media background and commitments of various types. But the power of banking and the essential role that banking plays in realizing the objectives of our public policy and what our communities want and need. Money has to be there, and it's currently under the control of private interests. And I've really grabbed hold of that and I'm a senior advisor. I was chair and president for Public Banking Institute for a couple of years, and have been advising and directing PBI just for about 10 years. So an old timer in that sense, in that context.
Well, yes, we have quite a bit of expertise on this panel, so really excited for that. I guess normally, pre-COVID times, we'd be getting a nice round of applause, but we're on a Zoom panel, so I won't be clapping, but I really do appreciate you guys, and I'm sure everyone in the audience does as well, showing up and being with us here today. So gonna move on to the discussion now, but just as a reminder to our panelists, this is predominantly a discussion, so feel free to add on or respond. I'll try to be asking each of you questions, and if I interrupt you, it's just because I have an eye on the clock. It's not because you're not necessarily saying something very valuable. So I actually wanted to start off with Representative Kobayashi. And the question I had, you mentioned you've got a good deal of banking experience in your life before you became a legislator. So I was just wondering if you could expand on the role of banking in government right now, kind of what the status quo is and how it looks. And of course, Representative Perruso, I believe you're on the Finance Committee, so maybe we can have you add on to that after Dale finishes up with his answer. But Dale, take it away. What does banking look like right now? What's its role in government and the relationship there?
So, on a global basis, I worked for mostly banks, but I worked on the other side of the Chinese wall on the investment banking side for most of my career away from Hawaii. So when I came here and joined the local bank, that was something different. So they have a 30-act company that does mutual funds that I was the president of Bishop Street Capital. And that's a fully owned sub of First Hawaiian Bank. So that took up a lot of my time. But as the chief investment officer, I also got involved in just general policy as senior manager for First Hawaiian Bank. And wasn't that surprising? I guess I knew the way things were, but any effort at antitrust in the banking sector here in Hawaii is just some non-existent joke. So whenever we had I came up with just a flurry of new products when I came in. I'm all about changing things and making money. So I bumped up the revenue of the bank like significantly my first year as chief investment officer, and a lot of it was coming out with new platforms and products. And I priced them all out and was basically told that, okay, look, we need to check with the way Peter Ho, Bank of Hawaii CEO, is pricing it, and CPB, and and this is openly discussed in management meetings about price fixing. So, and you can see it every day as interest rates fell. All the banks, local banks, dropped their deposit rates the same day. It's not a coincidence, right? It's discussion. So the oligopoly profits generated by the 4 large banks are significant. They basically are taking well over $500 million out of the tax, if you will. And it's history of what we are here. I mean, people pay monopoly profits to one family for all furniture they bought here for generations. There's one department store allowed to operate. The smaller a place is, the easier it is for money interests to get their arms around it and squeeze it to death. And that's always what happened here in Hawaii. And that's what happens in banking. And it's a tax on the people of Hawaii. So that becomes fairly obvious. And, you can't count on any antitrust protection. I mean, that's basically been decimated in the country, and for banking in particular. And the banking lobby is inordinately strong here. And that's why we haven't been able to get any place on this. So, I mean, it seemed fairly obviously what had to be done. And when we went to medical cannabis, it highlighted the fact that, we have inconsistencies between what our commercial banks are willing to do and what we need to do. And, as we get into more of a credit crunch, given the policies of the lockdown that has been extremely strict here in Hawaii, you're going to find that the banks are not aligned with the interests of the community in terms of what they're willing to finance and why and how. So the state bank can get past that short-term profit element. And there's obviously a lot of reasons that we're looking at. There's environmental reasons, but a lot of it to me came from being senior management at one of the big banks, the biggest bank here. And it's fairly obvious what's going on here and what that costs the people of Hawaii every day.
Right. Yeah, I don't know if Representative Perruso, you have anything you'd like to add from your perspective on the Finance Committee there, especially with the budget crunch we are facing.
Right. Well, I think in part what we're looking at is our fixed costs for the budget, and a huge percentage of which is debt service. So I think that kind of definitely figures into the conversation. But I wanted to add on to what Dale was saying, because I am also deeply concerned about the ways in which finance operates in our state and serves to exclude those who are already marginalized. So it's really hard for people without capital to qualify for loans that might help them prosper, might help advance them, increase their opportunities. And I think that we need to have a way in which our public monies are being invested back into our communities. And I don't see that happening right now. So I think that's really why I'm so committed to this. It's really what I see happening in my community.
Thanks. And then, Walt, just to give you a chance to look at that too, kind of what you see as the status quo, and you could kind of maybe give us a more national perspective on that. And if not, the next question was for you in your presentation, so we could.
I see. Okay. Well, it's great to hear the clarity that our representatives here have on the issue. We have a systemic problem with the failure of money to serve the public interest. And it's because the people who are handling the money and dealing with our money are private business people. Fine, they need to make a profit. They want to make a profit, and they make plenty of profits. So what we need to do is create a new institution owned by the public, which is to make money a public utility, to work for the public interest rather than private interests. And of course, once you have to have the franchise of a bank, you have an enormous potential to diversify what you're doing with your money, where it sits, where it goes, what it costs, etc. So the whole world of possibility opens up when you have your own bank, when you're not borrowing everything that you need. Now, so what the representatives have indicated, what is the really an unsustainable reality for cities and states all over the country, and that is that their debt load's growing enormously, and they have no place to make new money. The cities and states are locked into taxes, a couple of little incidental revenues along the way. But when taxes go down at a time like in the COVID crisis, for example, when businesses close up, then the money and the resources that are available for governance is undermined. And then, of course, when Hawaii last year paid about almost $300 billion in interest to Wall Street for borrowing against its bonds. That's 1 year. Okay, 10 years, that's $3 billion. What do you got? Could you do something with that? Plus the fact that the money is leaving the islands. The money is going out of town. It's coming over here, over to New York. So we're stuck. We're not stuck at all. We're in a situation where we now actually have a chance to re-experience, rediscover a great American economic model, which is Alexander Hamilton basically started it. And basically we finance ourselves. That's really what the public banking movement has now become, is a response to a broken system that has only moved the money one way and is now deprived the governance, the resources, the tools, and the people of the money of their money. Okay, of their money.
Well,
now, go ahead, Michael.
Maybe this is a good time for you to go through your presentation, and if you'd like to. So the next question I had for Walt was just going to be to give us the background on basically what a public bank is. Walk us through the basics. I mean, I think we've kind of established a little bit of the status quo. So Walt's going to spend the next 10 minutes or so telling us before he starts, and I think it's in his presentation, but it's worth highlighting if you haven't heard it yet, just the fact that Representative Kobayashi mentioned and Walt, that we're sending pretty near $500 million out on these banking services. And, even if you can reduce that 10%, you just amortize that over years. That's a lot of money. So we're talking about significant savings, but yeah, go ahead, Walt.
Okay. Well, I'm going to make this quick. I'm going to go through this hopefully without a whole lot of drama. Okay, so we've mentioned this. The problem is that we're sending a lot of money to Wall Street. State revenues aren't great enough, so the ability to finance is limited by our ability to borrow, and borrowing costs money because of the interest that must be paid to private parties. I've got a kind of a hair trigger here. So other problems, of course, pretty obvious. The control of the credit that we need for our economy and what it costs us to get money is out of the market, the private markets. The credit manager of the Federal Reserve in 1934 said, look, we're completely dependent on the commercial capital markets. When they want to create money, and price it appropriately, we can either afford it or we can't. Now, one of the things about banking, and this is, addressing the question, why do we need a bank? Well, we've touched on several of the reasons already, but one of the things about banking that people don't get is that there's a bit of legerdemain there. It's kind of a magical kind of a thing, where you have a nest egg, a capital amount that you start the bank with, which is money that the bank never spends, never loans out. In fact, it doesn't loan out money anyway. But that's a technicality. But the idea is that you with the capital, and you're operating your bank prudently and responsibly, you can leverage every dollar of capital that you have 10 times. Actually, as the representative will tell you, they leverage it a lot more than that on the international scale. But as has been mentioned, the private banks really have very little incentive to reinvest in our communities. Our local community banks have diminished in size, at least in the mainland here. The thousands have been going out of business. They've been bought up by the big banks. The big banks don't do the kind of lending that community banks and credit unions do, which is basically support the local economy. So that from PBI's standpoint, we're very strong supporters of community banks, because community banks are kind of the infrastructure of the local economic machinery of how people get credit, and those bankers know their customers and so forth and so on. But the banks that have been buying them up, the big banks that are playing on the global capital markets, don't care to lend your little shop some money. The risk is higher. They can make just as much money, or they can make way more money with the same amount of time by getting into the financialization in financialized markets. And so they're not that interested in local public investment. So having your own bank allows you to direct what you can do with your equity by monetizing your equity. Now, look, here is a fundamental rule. Most people think that banks are intermediaries, that they take money out of one pile of deposits and they lend it out. And Professor Richard Werner did an empirical study of this, and he said, this is not true. Banks don't make loans and they don't take deposits. Now, that sounds like hypocrisy, or not hypocrisy, but sounds like completely false. But it's true. When you put your money in the bank, the money belongs to the bank and it can do whatever it wants to with it. And what banks do is create new money by creating deposits. And a state bank would operate the same way. So what is a public bank? It's a bank that's owned by the city, county, or state. It has a mission that's determined by the people. It partners with and doesn't compete with community banks and credit unions. At least that's kind of the model that we've been working with. And we see it being run by professional bankers, not politicians. Banking is a profession, a skill. It's risk management. It has a great deal of precarious positions that it can get in, and you have to have professionals, not special interest people doing it. But around the world, it has been shown to be an economic stabilizer, because public banks, again, by keeping the money in the neighborhood or in the town, in the city, you're retaining that equity. Around the world, public banks have about 25% of the global assets. And there are plenty of examples around in the United States. I mentioned one with Alexander Hamilton, but even before, the first public bank was in Philadelphia, by the Quakers, who set up a mechanism for the locals to get money to build their houses and start their businesses. And basically, of course, Philadelphia was a much smaller town at the time. And if you would give somebody some money, you knew where they lived, so you could always go get it back if you needed to. But more importantly, it vitalized the American economy so much so that when Ben Franklin went to England in 1764, and the king says, "Hey, how's it going, Ben, in the colonies? How are things?" And he says, "Oh, you're not going to find anybody happier on the planet than the American colonists, because we are making it happen." And the king was a little surprised at that, because his citizens were living in squalor outside. And he said, "Well, what do you contribute that to?" And he says, "Well, we issue credit. We have created our own currency, our own credit, and everybody's doing very well." And then the king then said, "Hey, you're what? You're making up your no. You're going to stop that. No more making of your own money. You'll get your money from us and you'll pay us for it." Now, that's the Bank of England model, and that's the model we live with today, because we've abrogated or given up the sovereign right for us to create a credit for ourselves. Now, that's just a little sidebar, but here's an example. The Reconstruction Finance Corporation, which is kind of a predecessor to what is now being proposed as a national infrastructure bank, was highly successful, built all of the fabulous stuff that happened out of the New Deal. and funded World War II, and did all of the stuff that it did and made a profit. That was a government-owned, publicly owned bank. By the way, Canada's central bank is the only one in the hemisphere that is also a public bank, although they gave up their meaning that they can create as a sovereign agency their own money, and they don't borrow it from the global markets. Canada and they built around the same time all the St. Lawrence Seaway. They did their Trans-Canada Highway. They built their medical system, their health system, their university system. They did all of that by having their own bank, and they had very little debt until the Bank for International Settlements and the global capitalists came along and said, "Hey, you need to play on the global scene with us." And now they have a multiple trillion-dollar debt that they have to handle. Other examples: postal banking. I think we all know, you probably all know, that about 25% of the people in the country either are unbanked or underbanked, which makes their ability to get credit more expensive and less available. There is now a bill in Congress that Senator Sanders and Kirsten Gillibrand have put in, which should be on the floor again this year. And then, of course, there's the only existing public bank on the continent, anyway, is the Bank of North Dakota, which everybody is pretty much aware of. Started out of the Unionist, Socialist, 1919, 1920 era, about 100 years old. The reason the people started it is that they were getting ripped off by the bankers from New York and the railway people from Minneapolis and the grain dealers from Minneapolis. And the farmers who were working their tails off said, "Hey, we're not stupid, we're getting ripped off." And so they took over the government, little thing like that. First thing they did was create a state granary. The next thing was a state bank. They didn't actually intend to do the bank, but that's the thing that retained, although their granary is still there as well. Now it's a huge success. The Bank of North Dakota has been, here you see the Wall Street Journal referred to it in 2014 as the most profitable bank in the country. Their return on equity, pretty consistently for the last 15 years, about 18 to 26%. That's return on equity now, which means that's a level of profitability. And you say, well, why so profitable? Well, the bank, first of all, has no private shareholders, so it's not paying dividends. It's not in the market of paying big bonuses and fees and commissions to its staff. It doesn't have an advertising budget per se. It's got a huge deposit base, like the state of Hawaii. It has all the state revenues are by law put into that bank. It doesn't have branches or ATMs. The savings are passed on to the borrowers. The legislature periodically comes to the state bank for dividends to be able to compensate for failures or deficiencies in the budgets. And importantly, I think for all legislators, it creates new non-tax-based revenues, meaning that having a bank can be quite profitable. This bank is very profitable. It's been consistent year over year, bigger profits for the last 20 plus years. And it has no bank failures in North Dakota either. So of course, we talked about the high cost of private finance. You can't blame your legislators for having to pay the bill to Wall Street. Because if they don't pay the bills, then they don't get the credit rating. And once again, as a result of being supplicants in the capital markets, they have to do that. So if you're not getting your schools or your roads fixed in LA, for example, they spent more in interest rate swaps than they did on the roads. Philadelphia closed down 20 schools a couple of years ago because of their obligations to Wall Street. This is a yoke that we've been saddled with that we don't have to continue to wear. It doubles the cost of infrastructure, simply by the cost of the money. In other words, if the Bay Bridge in Oakland costs $6 billion in design and construction and materials and all that stuff, by the time they're through paying for it, it'll be another $6 billion. And that's true for pretty much 40 to 50% overage in the cost of our infrastructure developments. In North Dakota, when they had the COVID crisis earlier, their relationships with community bankers around the state is so well developed that they were 10 times faster at getting out the money to people in their state. And as you can see from that, they were quite, very successful. And another comment about this opportunity is that when you have a bank, you have the ability now to create some new digital infrastructure, to be able to allow people to do business with the state and digitally, and to have a network of exchange and possibilities that you also don't have now. So wrapping up here, another example, by the way, of how poorly positioned we are as states and cities. As I mentioned before, the COVID has diminished the tax revenues. As a result, the states have had to borrow money when possible in the markets. And the Federal Reserve, which, by the way, is also a private bank, owned by private banks, with some marginal sort of oversight from the government, they have a window, what they call the discount window, where they have liquidity available for banks, which banks must have when they run short on dollars to cover their notes, their loans. The window at the Federal Reserve is now for people who have access to it, was 0.025 to 0.075% interest, okay? Less than 1% by a lot. And so the banks, and at that time, hedge funds and some others, corporate representative could tell you, who got access to that window. But states and cities could not borrow there because they didn't have a bank. They didn't have a bank in good standing. But so what did the Fed do? Well, what the Treasury did was created the municipal finance program, which allowed the states and cities to borrow, but at market rates with a penalty. So not many people, like only two agencies, took that up. One was the state of Illinois, which is a basket case financially, and then the MTA in New York, a transit authority that also had to have money. So, all right. So what I'm saying is the flexibility, the access to liquidity is greatly changed when you have your own bank. And I think that wraps us up. This is just a kind of a snapshot look at some of the places where public banking is very actively engaged now. Okay.
Thanks, Walt.
All right.
I appreciate that. That was a great overview. I think we had someone ask in the chat, or maybe it was a Q&A, if they could get a copy of that PowerPoint. So maybe I'll do that later, distribute it if that's okay with you.
Sure.
But moving on. So obviously this group has some sponsors, our own organization, YPDA, HAPA, Sierra Club. So we're, at some level, we're all advocates, right? So I just wanted to give Representative Dale and Representative Amy kind of an opportunity to go in a little bit into kind of the role that they see a public bank playing in Hawaii. And then, the kind of the maybe more of the economic side you see it playing, and then maybe give your wish list too, or the things that, if everything went perfectly, this is what it would do. And maybe we'll start off with you, Representative Perruso, on that question, and then Representative Kobayashi can add to it.
Sure, and I'll just give you a couple examples, because I think that there's a long list of purposes that a public bank can serve. But for one example, my colleague Sunny Ganadin, Representative Ganadin, came to me today with a resolution to develop co-ops to take over the bankrupt hotels, right? So to have co-ops be able to find the financing to purchase the co-ops is it's a difficult question if you don't have a public bank. So I think that to finance the cooperative movement, I think public banks can be really powerful. And I think, it just makes sense. It's just rational to have our public monies not be contributing to the profit margins of international finance capital, but to be circulating back into our own communities. And I just think that right now we are crippled by debt. And I see public banks and at the federal level and a national infrastructure bank as mechanisms to kind of heal ourselves and de-link from private finance.
Yeah, thanks for that. And then Representative Kobayashi, I guess you're up. And you're muted. You're muted, Rep.
Sorry, I had my dog in here is kind of barking, so I muted it. But a lot of the way I had to frame this thing in terms of marketing was probably not how I originally looked at it philosophically. And the you guys hit the nail right on the head as far as there's a lot of details of things that we can benefit from, but more than anything else is having the agenda of the public bank being driven by the public interest and not by private profit interests. And if you look at right now, even everything we've done, we could have gotten money and given out to people affected by the lockdown, $500 each, but the banks had loans out to the restaurants. They want to get paid back, so they got restaurant cards. So everything is driven by the bank's interests. And you see that. And there was such an enormous amount of opposition to this when I first started doing it. And these guys, I mean, they worry about certain things. They're talking about, I'm a Trotsky socialist, that, this is just part of my agenda. And and it is, but that's not how I was selling it. But we're selling it based on the economic benefit to all of us. And I'm selling it as a Wall Street guy, not as a socialist. So, and I think that's key to what we're going to be doing is to, socialize everything here one step at a time. This is going to be first. But this mindset has to be sold in a certain way, and that's the benefit and the economic state and to the people. And that's how I got it through the House last time, and that we have the expertise now to do it. That I can drive this thing, and the banks are going to fight this tooth and nail. And once we get things going, the devil's going to be in the details. And even to get this bill passed, I mean, I'm not jumping up and down at this point. I mean, I'll jump up and down, when we get, the banks open and things are working the way we need it to be. And there's going to be opposition every step of the way. And I get it every day. I mean, the CEOs of 4 big banks are friends of mine. I just hear it all the time. And it's something that we can't let up on. So we'll get this thing done. We're going to have the working group set up. They're going to try to stack it with their people. So there's certain little idiosyncrasies in the bill that I have there to make sure that doesn't happen. But there's a ton of risk in how this thing gets established once we get this thing up and going. And we just need to all be very diligent and keep an eye on this. And I need the public support on this to scream bloody murder if things aren't going our way, because that's what's going to get changed is a public outcry that, okay, we got all this done in public bank, and now you're just decimating everything we set it up for, because that's going to happen, believe me.
Yeah.
If I may.
Yeah, I wanted to turn it to you, Walt, so go ahead.
Yeah, what Representative Dale is saying is absolutely the case all around the country. The banking lobby, I mean, as Dick Durbin says about Washington, the bankers own the place. And this, of course, is fundamentally a part of what's wrong with the architecture of our government right now. And part of the ways that we talk about public banking is democratizing our money. So that resistance is going to be strong, and the only way that we're going to get past it is for, as the representative said, is to have strong public support. So I'm glad to see you've got an amalgam or an aggregation of public groups behind you. Now there is as Representative Amy says, there's a simple logic, a common sense: keep our money at home and invest in ourselves. Just getting our hands on our money shouldn't be that tough. You know, we do, and one of the points that has been made around the country is that the cities and states do not exercise their rights or their ability to leverage inside the monetary markets. They're complete supplicants. They don't have with the kind of expertise that the representative has in banking. You guys are very well along. And I just want to point something out. I mentioned I'm an old timer at this, but I started working on a Hawaii public bank in 2012. And around the same time, the bankers in Massachusetts connected with their buddies at the Fed and created a study that said public banks are unnecessary, they're expensive, yada, yada, yada. And we've been seeing it for a decade. But that's giving way. The people around the country are, you know, have got the picture. So let's move powerfully and confidently forward. Representative Amy's comment about co-ops is a beautiful example of how one step can be taken to build the infrastructure, the sinews of local economy. Land trusts are also another way of investing in our local equity. But there are all kinds of ways that we could do if we had a bank.
Right. Yeah, and so we mentioned a couple things, and Walt, I figured I'd ask you this question just briefly before I go into kind of trying to strongman the argument against potential criticisms. So I'm going to do that in a moment. But just before we do that, and you hinted at it a little bit in your presentation and now, but how does the public bank actually operate? What are the mechanics to which it's doing all of these potential benefits, right? And I mean, obviously, it's not a silver bullet. It's just one tool among many. It's an important tool, but it's not going to solve all our problems overnight. So I just wondered if you could explain maybe a little bit about the partner bank model and just some of the other mechanisms that a public bank actually uses to accomplish things.
Well, there is no set form for a public bank. The bank will have a mission, and it'll have, once you first of all need to decide what you want it to do, and then you can design the architecture and the management and so forth around that. Basically, if you're going to put all of the money that you collect, that the government collects, into the bank as a depository, then it will have the ability to leverage that capital perhaps under the auspices of the FDIC and the Fed, but you could do it on a state basis without that. And I would encourage you to consider some thought about that. We've had some bankers that said, look, stay away from the FDIC, do it yourself. You'll have a lighter regulatory oversight and so forth. So I think that's something to, especially if you have the expertise, and you do, to be able to arrange that. But basically, you know, the deposits come in, you have a capital egg, you've got some certain commitments, and you design a portfolio that allows you that serves the mission of the bank. And you operate it prudently and with transparency and accountability. All of that has to be very, very clear to the public participation. The board of directors needs to have some representation of the people. It needs to be really, as I said before several times, it needs to be professionally run. But you really need to keep a couple of arm's length distance from the politicians. Not, you know, only because that's just the way the business is. I mean, out here in New York, New Jersey, Pennsylvania, people say, what, you're going to give the politicians a bank? You're crazy. So, you know, but it's, you know, the government is can be quite successful in operating public institutions. It does it all the time. We have to change that attitude that we can't trust our government. We can create a beautiful legacy institution of public service by starting this thing with that kind of an attitude. I don't know if that answered your question or not, but
no, I think that got us a good way there. So I'm just gonna throw out, before we start the Q&A, gonna throw out some potential criticisms, and I'll start with the first one. I had an op-ed that went on the Star Advertiser, and if you read the comment section, everybody's saying essentially the same thing, and you mentioned it briefly. But what they're talking about is the politicians. No offense to either of our representatives here, but you know that there's a lot of mistrust nationally, obviously, but also here in Hawaii in public institutions, and a lot of distrust that you can trust a politician to not be a crook once they have the opportunity to have money. So um, can we really trust politicians to be in charge? And whoever wants to answer this, I'm just going to throw it out. Can you trust politicians to be in charge and to set this up properly? And then maybe how do we deal with that criticism? So any of you, the panelists, if you'd like to take that on, go ahead.
Well, I'm not a politician.
It's like any other bank, any other business.
It's like any other business.
We'll go Dale and then we'll go Walt.
Is there any other business? I mean, you have internal controls that, you know, executives can't just go dig into the VI to divert it to a certain interest that, you know, is not in the interest of the charter of the bank. So you have things that you can do. You know, what's ridiculous about that whole argument is if there's anybody you can't trust, it's the bankers, right? I mean, the commercial bankers. It's like, so, yeah, I mean, you know, can't trust anybody, but, you know, I'll trust anybody more than the bankers. That's for sure.
Yeah, and I'll just totally agreed. You don't know where your money's going when you give it to Wall Street, and they're certainly what they're doing is nothing for you that you at least want to have done, probably. And I just think that, you know, we're at a time, I think, in our democracy where we really have to reclaim our trust and recreate some trust in each other, as well as the systems that support it. So the mythology that government can't be counted on is built on some facts, but there are a lot of other compensating facts that we have not acknowledged. And it's time for us to get on with our own business. And I think, again, transparency and accountability, at the very least, you just don't let the political and special interests have a say in who gets the money. That's just it. And the people get to see where all the money goes. And they're involved in the conversation about, you know, there's an advisory board, or the board of directors has a public advisory board that's open to the public. So, you know, it's a much different environment.
I want to add that I think it's an opportunity to rebuild trust. And I think that it is a matter of doing the work at the front end, making sure the legislation, the guidelines, the guardrails on developing the institution are very sound and clear and well developed. So I just think that it's about being thoughtful at the outset and sharing that entire process with the public. So this conversation is a start, but then also having this be part of the general conversations at neighborhood board meetings, at city council meetings, so that people start to develop the vocabulary, the kind of background that they're going to need to understand what we're developing and whether or not they support it. And I think that once people understand the common sense logic of doing this work, then they will support it. But I do think it's a matter of education. It's going to be an educational lift.
Micah, you're muted.
Right, thank you. So it sounds like basically, you know, the way you do it is you have kind of institutional, the arm's length separation that you had. It's an independent board. It's run professionally. And there's the opportunity, I think, Walt, you mentioned this previously, to you need a member of the public, even though it's run by professional, a member of the public is on that board. So you have some public oversight of the thing potentially. You know, there's options in how we set things up, obviously. And yeah, if it's successful, I mean, we really do need to rebuild the trust in our public institutions. So thanks for mentioning that. So I guess the other question here is that the potential criticism I see coming up is that we already have a ton of debt. And if you make it easier to borrow, aren't you just making it the case that we're going to have more debt, the government's going to be more reckless and irresponsible and that. So if anyone would like to address that question, and again, open to whoever.
Well, who do you owe the money? Who do you owe the debt to? If you owe it to the banks, to private banks, then you're going to be paying the premium that that relationship requires. If you owe it to yourself, there are a variety of things that you can do to ameliorate the load of that, to time it out, to be able to compensate. But I think also one of the things that maybe I didn't say very clearly is that one of the model that we've been promoting, a little like Bank of North Dakota, is that we're not making retail loans. That is to say, we're not in a high-risk lending environment. The Bank of North Dakota is a beautiful example of a partnership relationship with the local community banks that have made the community bankers, and we've been trying to educate community bankers around the country to this, that the most successful and most numerous community bank contingent in the country is in North Dakota. And the reason for that is that small community banks don't have the kind of capital depth that can keep up with the big banks that are also in their market. So that in North Dakota, if you want to expand your dealership of something for $10 million and your local partner bank, your local community bank can't go that deep, but they've known you for 25 years, then maybe they'll say, well, look, I've seen your paper and your plan looks good, and I know you, and let me call up Bismarck, or let me call up the bank, the public bank, and see if they'll partner with us on this loan. And that's how, and so the community banks in North Dakota, a lot of indicators about some important indicators here about what a public bank does to stabilize the economy. They control about 82% of the deposits. Community banks control 82% of the deposits in the state, and 18% is in big banks, indicating that the money stays in the state, and that the business is not taken away by the big banks from the community banks. Community banks are players because they share the risk. Because the public bank shares the risk with the community banks to make some of these loans. And the public bank can say, look, we want to stimulate small businesses, or we want to stimulate green energy. So we're going to issue a line of lending, which we will ask our community bankers or invite our community bankers to partner with us. We'll share the risk, and we'll be able to get them more revenue, as well as build their market share as well. And then in the process, of course, build the community. So there are going to be hundreds of ideas, ways in which we'll be able to redeploy our money in partnership with our community, with our local bankers.
Yeah, thanks. And that actually answered, oh, go ahead, Amy.
I have a question for Walt, actually. So are there any examples of public banks that have transitioned slowly into the sector? So building that infrastructure over time, or must it necessarily be all at once?
No, it's a good question. And of course, we only have one public bank at the moment, but there are several in the works. And one of them, there was one study and one proposal for Los Angeles and San Francisco is to stage the bank by creating an initial financial authority that would allow the government to begin some of this lending process in partnership with some of the existing chartered depositories, so that they would begin the process of building the management professional infrastructure, as well as a track record of being able to use some of the resources you have to get money into the community and start to in that way. And then in the process, then that would allow to build some trust and some experience, which might facilitate getting either a state charter or a federal charter for the bank if you wanted to go that route. So yes, you can do it. You can do it a variety of ways.
I just have one more potential criticism, and then we're going to move into the Q&A just to keep us on time here, but we're doing pretty well, actually. And so the final criticism that I thought of here is, how do we reduce the risk to the state, right? Because these are state funds, and as you hinted out or hinted at, Walt, the bank kind of creates money. So there's the potential, especially, and this goes back to the question of, can you trust politicians, right? So if you did have a situation where people are lending the best buddy money, right? then you have a situation where the bank's lended more than it has in terms of reserves. So how do we, what's the situation look like with risk to the state? And is this really just too risky for our government to undertake? So if anyone would like to address the question of reducing the risk for the state so that we don't become Goldman Sachs or Lehman Brothers. I forget which one that we have.
So it's similar risk you're going to see in the private sector banks, and it relates to certain activities. Lending is turned into a basically low to no risk activity. I mean, you just follow federal guidelines. You pass it on to, at least for residential, you pass it on to Fannie and Freddie. We are going to take more risk than the commercial banks do. Part of the problem is the commercial banks don't make business loans. Small business don't do unsecured loans. They don't finance things that are not risk-free. So part of the whole idea of doing this is we're willing to take the risk that they won't. And there are. I don't think you can ignore that risk, but generally, our policies would be to minimize that. And on the other side of the coin, you're lending and you're investing, right? So, our investments would be as safe as you can get. So, banking rules have changed to where you can, really take your banking money and put it into a lot of different things if you want to that typically weren't allowed. Now you can. So there's been a separation between investment banking and the commercial banking side of the businesses. So commercial banks currently take an enormous amount of risk on the investment side and none on the lending side. So we'd be probably a little bit opposite on that, where we'd have safe investments and riskier lending, not for financial reasons, but for community development reasons.
And I would add to that too, that again, by not dealing with retail loans, in other words, personal loans, letting the community banks do that, you build a portfolio that has a great deal of diversity. And this is why you have professional bankers who understand the nature of risk to be able to, do a complement of types of lending, but reducing the risk for the state. Lending to municipalities is a very safe place to go. And you just don't have defaults like that in that sector by and large, because you've got a tax base that can always make up for it. But more importantly, you want to have a portfolio that represents the commitments of the society and of the government, of what it wants to achieve. And you have to, and you have a balance and a dance, and that's the profession of banking. Yeah.
Okay. I think that's really. Oh, go ahead, Representative.
I have another question for Walt and maybe for Dale. So it's my impression, and I could be wrong, I don't know much about the sector, but it's my impression that we don't have a strong community banking sector. And does that make it more difficult to create a state public bank if they don't have strong partners? If that institution won't have strong partners? So
I'm
Dale,
sure
before I go on, Dale, do you think that assessment is correct, or am I just ignorant?
Well, I think there's two sides to that. From one side, you're correct that it would be easier if we did have those community banks, but the lack of that is indicative of the just unholy control the large banks have over everything here. And the lack of community banks highlights the need for what we're doing here. I mean, if we did have a robust community bank sector, you always need the public bank at a state level, but it wouldn't be as dire as the situation we face right now here in this state, where everything's controlled by 4 large banks.
Yeah, Walt, you have anything to add there?
Nope, that's spot on. That's exactly right. That in the lack of community banks, it's one of the ways that the public bank could be of such value to what you guys want to get done, because you'd have a new resource to achieve it.
Okay, we'll get started on that.
That didn't answer my question.
What was that?
My question was, I mean, they both answered one part of my question, But they didn't answer the other part of my question, which is, will that make it more difficult to do the work of a public or create a public bank if it
No.
doesn't support community banks?
There's a lot you do besides coordinating, loans with community banks. So that dynamic that Walt had mentioned is important, and that's going to be a little more difficult here with, just the large bank partners that are out there. But that doesn't negate at all the need for the other functions that the community bank is going to serve. So if you can attack that, and say, well, part of the equation. I don't know if that makes sense.
Well, do you have anything to?
No.
No? Okay.
No.
Well, we'll go ahead and we'll move into the Q&A, and then in the last few minutes, I'll give Representatives Amy and Kobayashi a chance to fill us in a little bit on their present plans before we go. So, first question, it wasn't actually in the Q&A, but it was emailed to me, so I'm going to ask it now before I forget. So this question just related to kind of the level, and the fellow who asked it was just wondering, maybe we should be building county level public banks instead of a state level public bank. So I don't know if you guys could comment on maybe the advantages and disadvantages of that, and Representatives Kobayashi and Perruso, you may have a legal perspective on that as to whether that's even possible in our current legal framework.
Well, from my standpoint, it's just a matter of what we can get done. And, there's different views on here, but I mean, to me, when it comes to corporate economics, this is, one of the reddest of red states that you're going to see here in Hawaii. And, to piecemeal it into, county banks, I think just makes that whole lift a lot harder, where we just hit it with a state bank once, you use a blanket thing for the whole state, and then you don't have to worry about all of those money interests coming out and, for every little county bank that you're going to face. So to me, it's just like, we just hit it hard once with a state bank, and that's what we do.
Yeah, I think that's a reasonable answer. So unless someone's jumping, we've got 16 questions and 15 minutes. So I'm just going to try to cruise through as many as we got. So the other question here, and it's an important one to answer, particularly in light of a budget crunch that we're currently experiencing, is how do you initially capitalize a public bank? What are the ways we could do that if we just have a few? Walt, maybe you have some experience there.
There are lots of ways to do that. An appropriation from the legislature would be a nice one, but there are certainly other ways. You could sell bonds. You could actually create a publicly generated bond fund that would, for some patient money. I suspect Representative Dale would have much better ideas than those. But there are many ways. And again, capitalizing the bank is really just the nest egg. Remember, you don't, because of the misunderstanding about how banking works, people think that you have to have all of the money that you're ever going to lend out available right now. And really, banks only need 1/10 of the money that they would have in the portfolio. There are other places that banks can get liquidity, the money to cover their loans, but not all the loans are going out all at one time. So in other words, that's the banking, the banking frontier. So capitalization, I'm sure Representative Dale would have better ideas.
No, I think, my idea had always been the simple one, to just get appropriation. And that's looking, well, nothing's going to get capitalized in this session, right? And what we're doing is looking at the working group. So, but if it was going to be right now, we've been told no appropriations, for things like this. So there's just this huge budget hole, and even the one they're talking about, as big as it is, understated, I believe. So we need to get past that, and maybe we can look at appropriation, but I think that's the easy way to do it. There's a lot of other mechanisms, you are correct, but it's definitely imperfect and risky to count on those mechanisms for something this important. The state funding it is the way to go.
Representative Perruso, did you have something to say? Sorry. No, okay. Yeah, this is just throwing out a wild idea, but it just came to me, so I'll ask it since I have the moderator. But I mean, you've mentioned banking, some of the unbanked groups, in particular, Pakalolo marijuana industry. Would that, if nothing else came of it, is that potentially a way to kind of get the capitalization built up a little bit? Just
possibly if you get it behind it, because there's I mean, it's for their benefit, and right now it's a huge problem for the dispensaries. And we have efforts this session we have a coalition put together for recreational, so that would really change the dynamic. But again, when it comes to Pakalolo, this is the reddest of red states again. So the powers that be have come out strongly and saying, no, we don't want to do it. So budget hole or not. So, but if we could get recreational, and even with what we have with medical, there's definitely a possibility for us to be able to approach that sector with capitalization issues. So that's a great idea, actually. But because in other efforts, I think it hasn't been the case where that's been such a big deal. But for this, especially recreational going, it can be really big here, and that'd be a major hole that for everybody that wants to go into any kind of dispensary, the big hesitation is going to be lack of banking.
Right.
And it would seem to me that the prohibition against the federal regulation against banks, chartered banks, doing that business would be obviated if you had just a state institution. If you had a state bank, you could just, you could do that.
Right.
Okay. So one of the other questions here, and it's just kind of maybe for folks to clarify the difference between a public bank and either kind of these community investment funds that we have, and also credit unions. So again, I'll open it up to whichever of the panelists would like to take that, but if you could clarify for the audience what the difference is between these private or semi-private institutions like credit unions and community development financial institutions and a public bank.
We have quasi-government banks that are basically government institutions for specific reasons. Agricultural banks, things of that nature, that operate on more of the continental U.S. basis. You have credit unions that are owned by the shareholders, but not by the government. We're talking about something owned by everybody, the taxpayers. State bank so it comes down to the capital structure, who owns it and who sets the policies for it. In this case, with the people of Hawaii, not all of them, not just who's the shareholders, depositors, and not just a bunch of politicians running a quasi-governmental agency with a board of 12 people that make all the decisions. This is going to be truly a people's bank for the benefit of all of us.
I think that in terms of educating the public, that distinction between credit unions and a public bank is the most important, because I think that many people consider their credit union to be a public entity. They don't understand that it's private. So I think that clarification is really important.
And another distinction as well, it's common parlance around the country to talk about iBanks, infrastructure banks, economic development authorities, all kinds of other quote unquote banks. They're actually not banks. They are revolving funds. And so that when you have an appropriation or you have some investors who are partnering with one of these banks, that when that money goes out the door, they don't have any more money until they get more appropriations or it comes back in. With a bank, the money from that can go into the bank, but the bank can leverage it. So there's a huge difference between those two.
Excellent. That was a very helpful answer. So here's a question. I think Dale had answered part of this, but it comes in two parts. So the first part of the question is, where are we depositing our funds right now? So who's profiting off of the deposits that we give? And then the second one, Dale, I think you mentioned this at the very beginning, is just how much are we paying in terms of service fees and transaction fees and that sort of thing to the banks, if you have a rough idea? Ballpark numbers, obviously.
Well, that's a good question. So sorry, the first part of the question was what?
Oh, just where are the funds deposited right now? Are they local, with Bank of Hawaii or First Hawaiian? Or
Oh, yeah. So the state of Hawaii has relationships with the four large banks here, and we pay them to do our state banking for us. So I had a request into the budget and finance people constantly about, what that amount is, and I've gotten a lot of non-answers. So, I mean, they got the answers, but they're not saying, but it's a big number. It's a big number that we pay.
Okay.
And I will get that number if I got to force it out. But I mean, at this point, there's definitely a circle of wagons that includes the budget and finance department against, really anything that'll help this effort.
Right.
Interesting. But as I mentioned at the outset too, according to a report by a group in Chicago, Hawaii paid $293 million last year in fees to Wall Street. Now, I don't know, that probably doesn't include a lot of other fees, but anyway, that's a number.
That's where the bond financing costs for municipal bonds. That's what we're talking about with that 300 million. I'm talking about tens of millions, not hundreds of millions.
Yeah, for managing the money.
Right, for managing them, it's just a fee that we pay to them. We definitely pay hundreds of millions to Wall Street, and that number was bigger when interest rates were higher. So, just to do our financing. That's what I did. My job was to convince state finance people to give Morgan Stanley the bond deals, and we could charge them massive fees. And that's what we did.
And I've got another one for you, and then maybe we'll wrap it up since we're running out of time here. But this goes back to maybe some of the risk. And the fellow's question, it's Regina Gregory is asking this one, is if public bankings are so profitable, why is the Bank of North Dakota the only public bank we have here in the US? There are a number globally.
Well, Representative Dale has been referring to this several times. It's because the 800-pound gorilla is the large banking industry that runs the governments, has influence, and also, by the way, has terrific influence over community bankers as well. If you don't have them, I suppose it's a non-issue, but that's really the name of the game. They don't want any competition, and I think that the representative has indicated that several ways. That's the name of the game. That's why this effort this vision that you have can be realized, but only if you make it clear to your fellow citizens that this is our money and it's our interest, and all of the siloed interests that you have. Whatever it's affordable housing, economic justice, environmental justice, whatever it is, we all have to pull together and synergize this and demand it. That's just the way democracy works. So now's the time.
Okay, so just before we go, we've kind of run out of time, and I certainly don't want to keep Walt up on the East Coast up anymore. But I just wanted to give Representatives Amy and Dale a chance to kind of discuss your strategy here going forward a little bit, and what we can do to help, and what we should be looking forward to coming forward. And I'm going to go ahead, if you haven't seen it, guys, I posted a form a couple times in the chat. So if you'd like to just stay up to date on this single issue, you can sign up on that form, and I will get in contact with you. So, but with that said, I'll turn it over to we'll start with Representative Amy, if that's okay, and then we'll move to Dale.
Sure. So I think that the bill from the House side will definitely be referred to finance. I think that's likely to be referred to a new committee that we have called Government Reform. So at the very least, it may be triple referred. But I do think, as Representative Kobayashi mentioned, that it may be something of an uphill battle. So we're going to need community testimony and support and messaging and education. I wanted to also mention that I am supporting Representative Kobayashi's bill, and then also offering a resolution on the National Infrastructure Bank. So that I think is like a supportive piece. So we will be sharing out the bill numbers as they are issued, and then partnering with you folks to make sure that you guys have all the information you need and can really help educate the community about this effort.
Yeah, I think that's really what it's going to take for us is support from the public, like op-eds like Micah wrote, testimony from the public about, because, you do have a lot of, it's not only the banking lobby, but it's just kind of a local sensibility in a way that, the moneyed interests that rape us daily are good guys, and that we can trust them, and we don't need to do something like this. So we need loud voices of progressives coming out and saying that's not the case, right? And that this is important, and that this is something that's going to benefit all of us. And I think there's definitely challenges with our leadership as far as supporting something like this, and we made it impossible to deny last session, and we had the votes to pass it in the House, and I had the votes in the Senate as well lined up. So it can be, but it's something that could turn on a dime. So I mean, people really have to get out and support this. There's this last election was a referendum on things like this. So the speaker was lost, a progressive candidate. It was a wake-up call at a come to Jesus meeting with him that is like, you don't fight, people, right? You work with them, right? And, this is all part of that you got to come to the table and work with us on this, or you're going to lose. And so are a lot of your people. You got 2 years to do the right thing. So, and I don't know, maybe he listens, and maybe there's something we can get done that with support of leadership, because I think, they do see the writing on the wall that, the world is changing even in Hawaii, and that they got to start doing the right thing by people, or they're going to lose.
Go ahead.
Can I just want to jump on that a little bit? I would say that this is such a common sense, much more rational approach to the fiscal situation that we find ourselves in, that for me at this moment, it's gone a little bit beyond progressive, corporatist, or the usual labels that we use when we talk about our landscape. I really think that this is the most obvious kind of legislation that benefits everybody, and the only people who I think should legitimately oppose this kind of legislation are maybe the CEOs of private banks, of the big four. I really don't see this as a controversial issue anymore. So.
Right. Yeah, I agree in so much. I mean, it's about managing our money well. And if you are a fiscal conservative, you should love this idea, just in terms of reducing the amount we pay on interest, in my opinion. Anyway, but Walt, I'd like to give you the last word if you got it, and then we're gonna wrap up, and that will be that. So yeah, thanks again to everyone here. But Walt, you got anything?
Well, thank you, everyone. It's been great to be here. I only wish I could be there, but someday perhaps. I will. I'll be in touch with the reps and let you know what's going on legislatively around the rest of the country. It's a very exciting field. We can absolutely do this, folks. We've just entered the age of Aquarius, and so abundance and sufficiency is going to replace austerity and scarcity, and there will be well-being and peace and harmony and all that stuff. So, take good care.
All righty, yeah, and thanks again to our panelists. I appreciate it a lot. Walt, especially appreciate you staying up so late. I wouldn't stay up this late for this. And Representative Stale and Representative Amy Perruso, I really appreciate it as well. With that, it's ended. If you sign up at the link, I'll try to answer the questions I see in the Q&A to you personally. If again, you got to sign up at the form because I got to get your email. And we'll distribute the great presentation that Walt had for us. And if you got any other questions, I'll just put my email in the box here real quick, and I'll leave it up for a second, and you can, so that audience members can copy that. But otherwise, we're done. So I'm going to stop recording. We'll stop the live stream, and thanks again, everyone. Cheers.
Thank you so much.
Thanks to you, Michael, for setting all this up. I mean, really great effort by you. I mean,
Thank
so
you. And
That's
thank
great.
you all.
Happy to help.
You're welcome.
Love you, Dale.
We'll be in touch and
Yeah.
get on with this. That's cool.
All right. Cheers.
Bye.
Thanks, guys. Bye-bye.
Okay, thanks.